So today I want to talk about the Federal Reserve. I want to talk about their current policy stance. Now, I have had a number of videos where I talk about the Fed. You can watch some of those videos by following these links here. I am, in general, a little bit critical of them. That's coming from a person like me, sitting in a chair, sitting in a couch, who has no authority. So keep that in mind. But today, what I want to do is I want to talk about talking about, no, I want to think about thinking about what am I talking about here? Let's go to it. Let's see what we're talking about here. All right. So you go backwards, June 2020. We are in the midst of the pandemic. Things could not be worse. There's absolute uncertainty just rampant across everywhere. Chairman Powell says in a press conference, we're not thinking about raising rates. We're not even thinking about raising rates, whatever that means. Says like we're going to keep stimulus coming for years. All right. We will keep rates unchanged until at least 2022. And just to be honest, we don't really expect we're actually going to change them in 22. Okay, so now we're going to fast forward to June 2021. Now, arguably, things are much better, right? I think the pandemic played out in a pretty good scenario in terms of we have a vaccine where we thought it was going to take much longer. The economy's recovered in a lot of ways. We still have some issues, but things seem to be a lot better. Now, Chairman Powell says, in terms of his meeting last week, says, you can think about this meeting that we had as the talking about meetings in terms of we talked about the fact that we're going to have to talk about raising rates in the future. Right now, here, when things are arguably better, we see that in June, they say we're going to raise rates maybe as soon as 2023. Back in March, just a couple of months ago, well, until at least 2024. So my question is, what's going on here, right? We have, when things were really bad, we were saying 2022 or maybe 2023. Now we're saying 2023 or 2024 when things are better. So I don't really get what's going on here. We also see that the Fed has said, look, inflation expectations just from March, where we said, hey, we think they're going to be about 2.4%. Now, 2 months later, bam, we're saying 3.4% in terms of inflation expectations. But they are saying, look, hey, this is a transitory thing, right? You've heard that in the news a lot lately. These types of inflation numbers will be abating soon. Okay. So now what happens, of course, so the market reacts to this. The market says, hey, the Fed's talking about raising rates maybe sooner than they had indicated in the past. Although if you go back a year ago, seems like it's the opposite. But what you get here is the market kind of immediately sells off here. You get the NASDAQ, S&P 500, the Dow industrial averages, they go down. We do see the next day, hey, the NASDAQ kind of shrugs it off, reaches new highs. But if we look at the other two, the S&P and the Dow, we see, over the 3 days, they go down. And even if you look at through kind of Tuesday morning, as I'm recording this, we see that it's still down in general, even though they've kind of popped up here in Monday and Tuesday. That's what the market is saying. Now, I'm going to say what the real worry for me is the Fed really looking at the data? Okay. From my perspective, the recovery is better than we thought it was going to be a year ago, and inflation is higher than we thought it was going to be a year ago. If the Fed is saying we're not going to raise rates until at least 2023, 2024, are they saying that we're not even actually going to look at the data until those time periods happen that passing? Or are they saying, look, we're always looking at the data. The data will determine when the rates change. So when they throw out these numbers, they kind of make it sound like we're not even thinking about it to the point where we're going to completely ignore the data and not even look at it until a certain date. That is the true danger there for me. So right now, if you're following what's happening in terms of a better recovery than you thought, higher inflation than you thought, unemployment still not where we'd like it to be, but things in general better. What I want to see is the Fed making the right policy decision, and the right policy decision should be rewarded by the market. Ignore all things equal. Okay. So that to me is the big worry, is the Fed legitimately looking at the data. That is super duper important. Now, speaking of inflation, I just threw up some links there. I have some videos where I talk about inflation, and there's some neat things in there that you may not be aware of in terms of how we talk about inflation now versus in the past. Really important stuff there. To check out those videos. Let me also say that the Fed is a little bit different than other central banks because they have a dual mandate. They have two things they have to worry about: price stability, inflation, and unemployment. Other banks do not have that dual mandate. Because of that, you see other central banks being a little more active and the Fed being a little bit slower. So in the UK, they're saying, look, we're going to basically by November, we'll have completely stopped any kind of bond asset type purchases. And you see in Norway saying, look, we are definitely going to raise rates this year, 2021. So keep that in mind. Because of that dual mandate, the Fed is going to be a little bit slower, given the fact that unemployment is still pretty high. And even despite the fact that inflation is higher than maybe we wanted. They're going to say, we're going to let that be a little bit higher because I think over the long run, through transitory nature of that CPI, that we can let that be a little bit higher in order to get that employment back up. So keep that in mind. Anyway, hope you enjoyed that. I'm Brian Kozlowski. Happy trading out there. Thank you so much.